This is Bite Size Business, the channel where we use financial metrics and ratios to gauge the financial health of companies. In this installment of Telecom, we will take a dive into Verizon Wireless. Verizon's history starts in 1983 as one of the baby bells, Bell Atlantic to be more specific. In 1997, they merged with NYNEX, which serviced the Northeast and Philadelphia and New York. Later in 2000, they would acquire GTE, who serviced the rest of the United States. In 2015, Verizon acquired AOL, and in 2017, Yahoo. These were packaged together, but later spun off and sold to Apollo Global Management. In 2008, Verizon acquired Alltel, which provided them with 13 million new users, propelling them past AT&T to the largest carrier in the United States. Verizon most recently purchased Frontier for $20 billion to expand its fiber network after seeing AT&T's success in the space. In the current day, Verizon does $134.2 billion in revenue, with 114 million wireless customers and 10 million broadband customers. Let me bring out the appetizers. The income statement shows that in the last 12 months, Verizon did $134.2 billion in revenue, paired up with $39.1 billion in EBITDA, leaving us with $9.8 billion of net income. Moving on to the balance sheet, we can see that in the most recent report, Verizon posted assets of $381 billion, liabilities of $283.5 billion, leaving us with a total equity of $98 billion. Of their $283.5 billion of liabilities, this is composed of over $174 billion of debt. Moving on to the cash flow statement, we can see that in the last 12 months, Verizon has had operating cash flow of $35 billion and free cash flow of $13.8 billion. One of the commonalities we see with AT&T is that Verizon did not list any buybacks. AT&T had a few, but not many. But the large dividend paid of Verizon boasts a dividend of $11.2 billion in the last 12 months. Now let me clear some space on the table and bring out the main course. Today's company was Verizon, who trades under the ticker symbol VZ. They're in the telecommunications industry and posted revenue of $134.2 billion. This is down from 2022's $136.8 billion. EBITDA came in at $39 billion, again down from the 2022 number of almost $50 billion. Net income sat at $9.8 billion, down from 2022's $21 billion. Total debt is a little higher than AT&T's, sitting at $174 billion, assets a little lower than AT&T's at $381 billion, and liabilities a little higher at $283.5 billion. Shareholder equity for Verizon is $97.7 billion. They posted free cash flow of $13.8 billion, up from 2022's number of $10.4 billion. Verizon did not show any buybacks on their cash flow statement, and they paid a dividend of $11.2 billion in 2024, or at least in the last 12 months. In 2023, it was $11 billion. In 2022, it was $10.8 billion. Moving on to the ratios, we can see Verizon posts a debt to equity of 1.78, a debt to EBITDA of 4.46, a strong EBITDA margin of 29%, and a net profit margin even to AT&T at 7. They don't do any buybacks, so these two categories don't really mean much. Revenue has been dropping by 1% a year since 2022, and EBITDA by 11%. The CAGR for free cash flow is 15% over the last 3 years. Looking at the comparisons, we can see Verizon has a high debt to equity and a high debt to EBITDA, paired with a high EBITDA margin and a neutral net profit margin. These numbers are very similar to AT&T, but the debt to equity for Verizon is slightly worse. Verizon does, however, distribute more capital back to shareholders than AT&T, which shows that Verizon is comfortable with their debt load and their ability to pay it off with their current free cash flow. Due to this, I will be giving Verizon a yellow light. Verizon is probably the closest we have been to seeing a red light, but due to the fact that they are comfortable giving away over $11 billion a year back to shareholders, they must be comfortable with their current debt load and have high hopes to be able to pay it off in the future. Now let me take you to the dessert. The dessert section is always sweeter if you're a shareholder, and Verizon probably has one of the sweetest dessert sections we've seen. While Verizon doesn't do any stock buybacks, they do pay a large dividend. In the last 3 years, they have paid out $33 billion to shareholders. This $33 billion is their total distribution because they don't do any buybacks, and as a percentage of EBITDA over the last 3 years, it is actually the same percentage as AT&T, showing that the space does like to generate a lot of cash flow and pay it back to shareholders. Their dividends as a percentage of free cash flow is 81%, but as of their net income in the last 12 months, it was 114%. That is kind of high, but Verizon's numbers were down from the previous couple years. Taking a look at Verizon's shares outstanding chart, we can see their acquisitions playing an effect. This jump comes right about 2015, where Verizon announced that they were acquiring Yahoo. They also acquired AOL shortly after, but we don't see much of an increase from that. We can, however, see that Verizon doesn't do stock buybacks, as shares have been steadily increasing. This is not bad, as they're likely using this to expand their network for customer acquisition costs or to get into the fiber space. We do like to see buybacks because it means they're returning more capital to shareholders, but as they have paid $33 billion in the last 3 years to shareholders, the lack of buybacks is not much of an issue. The check for Verizon is that they're often the target of lawsuits in government issues. This one is a $33 million lawsuit over a surcharge that Verizon did. This follows other large lawsuits and charges from the government, such as a $93.5 million charge that they had not long ago for some other issues that they were having. As we can see in this, it says Verizon paid the United States $93.5 million due to them overcharging for general services. They do have a history of some of these issues. We can see a Verizon $100 million settlement, again from Reuters, and this was paid out to over 10,000 customers. It's not the best idea for a company to try to get some shady charges off. It can help affect their net income, but it will often be found either by regulators or by customers and can lead to very large lawsuits such as this $100 million settlement Verizon is facing. I hope you enjoyed this video on Verizon, and if you did, I would ask that you please like, comment, and subscribe below. Please join me in the next video on T-Mobile to end out the American Telecommunications series.